Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Saturday, March 16th, 2024, and this is Blockhead Traders Weekly. This week is going to be a super short episode. I am losing my voice, and so the audio is probably not going to be that great, but I did want to call out this push in the wheel play that I took this week to kind of keep premium coming off of a Dollar General play that I have going. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. Also, you can go to fedigang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. If you can't find it there, let us know and we will get it there. But let's hop to this week's content. Like I said, this is going to be a lightning-fast episode. I just want to touch on one trade that I put on this week, and it's one that's been going for a while. And I just want to show you how important it is to kind of keep pushing the wheel. And you can keep getting premium out of these plays even after you're in the money and you would be assigned at the close of a particular trading day. And what I'm talking about is Dollar General. So this week, Dollar General had their earnings. And Dollar General is something that I played earnings 2 quarters ago. It went badly. Sorry, just 1 quarter ago. It went badly. The stock dove and really started to recover. I got assigned. I tried to roll it a few times, ended up getting assigned, and they're kind of working their way back, and I started selling calls against it. So this is the whole time chart here. And what I want to call out is I took assignment, and this is one of those stocks that pays a dividend. And so while I'm holding these things, selling premium against them, I'm collecting that dividend. And so back in January, I collected 60 cents a share off of these 100 shares for an additional $60. Now, I had sold a March expiration back in February, and I was able to pick $4.25 off that. Well, this week, yesterday was when that earnings announcement was, actually it was Thursday, but those options expired on Friday, and they were in the money. Quite a bit in the money, actually. And so you might thought, oh, you're toast. You're going to get assigned. You'll get your shares called away, which is great if that happens. But what you have to know is a lot of these people that are holding your options are going to take it into expiration, and they're not going to call you out early. So before the market closes on the day of expiration, I can go ahead and roll that strike forward to next month and actually collect a good bit of premium from that additional time. And that basically forces the person that has those options to call me early. And so, I could have just let the market close on Friday, got called away. I've been sold my 100 shares for $145. I'd have gotten the proceeds from that, and I'd have kept all the premium that I'd collected so far. Or I could do what I did on Friday, and as I closed that option position, which had almost no extrinsic value left in it, and I was able to sell a new one for an April expiration. So I pushed this out in time 1 month, and I collected another $232. So could they turn around and assign me early on Monday? Absolutely. Could they assign me early on Friday? Absolutely. But I get to keep that $232 even if they do. And so what I'm doing here is I'm pushing that forward, collecting more premium, forcing them to call me for an early assignment. I'm not letting it close in the money when I can keep rolling it for additional premium. Now, if the roll would have been, 5 cents, 10 cents, something like that, I probably wouldn't have. I'd probably let it expire, and I'd probably take the assignment, get out of it, start over again on the wheel. So let me pull up the chart here to show you what this kind of looks like. And so this is like my Flappy Bird chart, but the blue is where the stock price is in the money. And you can see that this was in the money basically since mid-February. So this is why in February I was able to sell that March expiration for so much premium, because it was really close to at the money. And so that's where I collected that $425. We went significantly up into the money, but that's okay because somebody had to call me early and they just don't do that. This real big thrashing that you see here, all the way up to almost 170, like 168, and then back down to 149. This was the earnings announcement. And so this was the volatility that I was selling into going into earnings. And this expired on March 15th, just yesterday. But what I did, because we were trading down here about 150, right? We're still $5 in the money. Is I said, I'm going to roll this. And if you really want to assign me early, I'm going to collect more premium and you have to call me early. So that's how I collected another $2.32 or $232. Now, the end of this blue box is when that expires. I want to also call your attention to this blue circle D right here, in the middle, early April, another dividend payout. So if nobody calls me early, I'll still keep holding this stuff. I'll collect some dividends and, we'll just keep riding this up into this expiration. And if we don't have a massive price appreciation and we're hanging around here at that 145, 150, 155, I'll roll it again and I'll push that from April to May, collecting more premium. So if I kind of go back to that chart, you can see that this trade has been kind of going since the August earnings, and I'm up to $1,785 that I've collected on premium on this thing, and it's above my strike price, so I haven't lost any money. Where it sits right now, I am fully in the profit. In fact, I was assigned at 145, but I've collected $17.85, so my cost basis is actually almost $18 below 145. So I just wanted to call this out this week to show you that covered calls, just because you're in the money, you don't have to throw in the towel. You can roll it and collect more premium. So that brings us to the end of this week's episode. I don't have much of a voice. We're not going to go any more into this. I just really wanted to get this out here as a trade that I rolled this week to collect more premium and just kind of keep racking it up inch by inch by inch. Premium selling is not you're never going to hit the grand slam. It's just single after single after single, milking that premium, expiration after expiration after expiration, and it adds up. And so I just want to make sure I call that out there because sometimes you're like, oh, is it worth it? Is it worth it? What's going on? And despite what market going rapidly up, rapidly down, thrashing around, premium selling, you can always make your money as you get to profit on that volatility in that time decay, which goes away over time and you sell it again, goes away over time and you sell it again. So good luck out there, whatever you're trading. Hope you find something interesting. And remember, think outside the block.